Hello and good morning. You're tuned into Market Cafe. I'm Ankita Saxena, and the next half an hour I'll take you through all of that transpired on the global front, how the global markets moved, the geopolitics, and of course, what are the cues you need to watch out for before the start of the street. So without further ado, let's get going with how the Wall Street shaped up yesterday. Now, an important inflation data that came out of the US, CPI numbers that came out, and that fell 0.4% in June from the prior month, bringing the annual inflation rate to 3.5%. Now, economists surveyed by Dow Jones had expected a 0.2% monthly decline and annual inflation of 3.8%. So it was cooler than what we were penciling in, or what the economists were really penciling in, 3.5%, and what the expectation was for a 3.8%. So on the back of a cooler or a softer inflation number, we did see the markets bounce back yesterday, because that sets the path for interest rate cuts. The Fed has been waiting and watching out for data points on what is going to be the path for the interest rate cuts, and this gives a positive boost for interest rate cuts. And on the back of that, positive sentiments all across the markets. Dow Jones were absolutely flat, but though in the green. S&P 500 gained 0.3%. Nasdaq was trading up almost 1% in the trading session. We also had a couple of names that were doing well in the trading session. The tech stocks made a comeback yesterday, and on account of that, we did see Nasdaq that was doing well. Also, investors will be watching out for another busy day of earnings. We have United Airlines, we have Morgan Stanley, Johnson & Johnson, and BlackRock that are all set to report their quarterly earnings as of today. Also, we have JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, and Goldman Sachs that have already topped the analyst expectations when they reported their results yesterday. But we are waiting and watching out for more results, like I mentioned, in today's trading session. So it is an earnings season on the Wall Street as well. But let's also talk about the crude oil prices that have been sitting smartly at the $85 per barrel mark, and they're refusing to budge from there. We are seeing an uptick of 1% on Brent. 85.72 is where Brent is at, and WTI also seeing an uptick of 1%, sitting at $80.11 per barrel is where WTI is at. So that's how the crude is faring, and let's take a look at the Asian handover as well. A sea of green coming in. I remember on the back of softer inflation data in the US and interest rate cuts, positive sentiments around that has been buoying the sentiments all across the world. We have Nikkei that's trading up 0.4%. Hang Seng is also up 0.5%. Shanghai that's trading up 0.2%. S&P ASX 200 is also up 200%. And implied start to Nifty is indicating towards a very, very muted flat start, though in the green. 23% of an uptick is 23 points of an uptick is what we are seeing as far as GIFT Nifty is also concerned. But let's talk about the geopolitics then. The US has sharply escalated its confrontation with Iran, launching fresh strikes on Iranian military targets just hours before reimposing its naval blockade around the Strait of Hormuz. Now, Washington says that the operation is aimed at protecting commercial shipping after accusing Tehran of attacking multiple merchant vessels. The move effectively ends last month's ceasefire, raising fresh concerns over oil supplies, global shipping, and stability in one of the world's most critical energy choke points. And moving on then, a bipartisan group of US senators has unveiled a revised Russian sanction bill that directly targets major buyers of Russian energy, including India and China. The legislation would allow tariffs of up to 100% on the 5 largest purchasers of Russian oil, while imposing sweeping sanctions on Russia's energy, financial, and defense sectors. The revised proposal is less severe than the earlier 500% tariff plan, and also gives the US president the authority to waive sanctions in the national interest. Listen in.
On gas purchasers, it makes an exception for the purchasers who are buying less than 15% of total Russian natural gas imports and are taking significant steps to reduce their purchases. So our European allies are not targeted here. Very important to understand that we have so narrowly crafted and tailored and targeted this bill to aim at the major Russian purchasers, the purchasers of Russian oil and gas. And we crafted them to make exceptions for our friends and for the aiders of Ukraine. Now is the time for this sweeping sanctions bill It's been referred to as a tariffs bill, but actually it imposes full blocking sanctions on wide swaths of the Russian economy, including its energy industry, financial industry, defense industrial base, oligarchs, business people, and Vladimir Putin himself. It imposes tariffs that are targeted, narrowly limited to the 5 major purchasers, up to 100%, with waiver authority that is narrowly tailored and constricted. And those 5 major purchasers right now of oil are China, India, Slovakia, Hungary, Azerbaijan.
Moving on then, the U.S. inflation cooled more than expected in June, strengthening expectations that price pressures are easing. Headline CPI fell 0.4% month-on-month against the expectations of 0.1% increase. The core inflation rose 2.6% on a year-on-year, below the 2.8% estimates. The core CPI was also unchanged on a monthly basis compared with the forecast of a 0.2% rise. Despite the softer inflation print, Federal Reserve Chair Kevin Warsh struck a cautious note, saying that the central bank has no tolerance for persistently high inflation, signaling the policymakers will continue to closely monitor price trends before making any decisions on the interest rates. And the Fed Chair Kevin Warsh testified before the House Financial Services Committee as a part of the congressionally mandated semi-annual monetary policy report. He said that he wants economy to be more broad-based and wants inflation increase to be limited. Let's listen in.
My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly price volatilities and variations are inevitable, especially in an unsettled world, underlying inflation over longer time horizons is determined largely by monetary policy. As the chairman said at the outset, inflation's a choice. The members of our committee have no tolerance for persistently elevated inflation, and we share a resolute commitment to ensure price stability. This was the focus of our June meeting, at which we decided to hold the target range in the Fed funds rate at 3.5 to 3.75%. Now, naturally, our work at the Fed demands a proper reading on economic conditions. As you see in our report, economic activity grew at a solid pace, showing remarkable resilience in the face of recent developments.
And well, the biggest talking point on Wall Street this evening is the IBM, with its share plunging as much as 24% in the early trade after the tech giant reported weaker than expected earnings for the second quarter. Moreover, the company has issued a stark warning that the AI spending boom is beginning to squeeze global enterprise software budgets, raising fresh concerns about the sector's growth outlook. Darshita is joining us with the details.
Right. IBM shares plunged in trade after the company released its shareholders letter, where both revenue and the earnings missed the street expectations. So what is exactly which went wrong? So basically, IBM reported its Q2 revenue of around $17.2 billion, which was below the consensus estimates, while the adjusted EPS also came in lower than expected, which disappointed the investors. Now, the biggest drag came from the infrastructure business, where the revenue declined due to the weaker than expected demand from the Z17 mainframe cycle. Now, that weakness also impacted the company's transaction processing software business. Although the broader software segment continued to grow, but it wasn't enough to offset the infrastructure slowdown. Meanwhile, the consulting business remained largely flat. And something which management also said was, according to IBM, the final weeks of June, many enterprise clients unexpectedly shifted their IT budgets. So instead of spending it on software and mainframe upgrades, customers accelerated purchases of servers, storages, and memory hardware, anticipating possible price increase amid the supply constraint. And management has also admitted to execution issues, where saying several large deals failed to close within the quarter as planned before, hurting hurting the overall revenue and the growth. So while the IBM's long-term AI and software strategy remains intact, this quarter exposed to how shifting enterprises' spending priorities and the delayed deal closures can quickly impact the financial performance, and that is what has actually happened in IBM, and hence the shares plunged.
Moving on, then the MEA has confirmed that the death of one of the India's seafarer in a strike by Iran. India has strongly condemned the attacks on 2 merchant vessels in Strait of Hormuz, which has also injured 10 others. The deputy chief of mission of the embassy of Iran was summoned by the Ministry of External Affairs, and a strong protest against these attacks was lodged with him. Srinjoy gets more details on this.
The Strait of Hormuz is not a particularly safe place, not for sailors, not for ships, not for tankers, not for container ships. And they have been attacked in recent times, and many of the sailors happen to be Indian. On one ship, an Indian sailor is still missing, presumed to be dead. 11 were rescued by the Omanis. But the important point is the Indian government is very cross. The Indian government is making it very clear that these attacks are unwarranted, which is why the deputy chief of mission of Iran was called in and basically informed about these attacks and told that the Indian government is unhappy with this, very cross, that ships carrying Indian sailors have been attacked and there have been deaths, and there could well be more deaths in the future.
Moving on then, today the India-United Kingdom Comprehensive Economic and Trade Agreement will come to force. The operationalization of this trade deal is historic and ushers in one of the country's most ambitious free trade agreements. According to the Commerce Secretary, this is one of the first FTAs of its kind, which establishes a future-oriented economic architecture between the 2 major economies of the world. My colleague Sumita is joining us with the contours of the deal.
That's right. It's time for fresh momentum to be injected in India-UK bilateral trade relationship, with the free trade agreement between both the sides coming into effect today. 2 major economies of the world with GDP of more than $4 trillion have struck this deal for a larger roadmap for economic collaboration. And remember, this was announced by Prime Minister Narendra Modi and UK's Keir Starmer at the G20 summit in France in June. So, of course, as far as this trade agreement is concerned, well, it provides meaningful market access across goods and services. It's mutually beneficial, but it also safeguards sensitive sectors for India, and that includes dairy and cereals. In fact, the same holds true for UK's sensitive sectors as well. This bilateral trade deal is expected to expand trade to $100 billion by 2030. Now, as far as major beneficiaries are concerned, well, textiles and garments for sure, leather and footwear, gems and jewelry, auto components, engineering goods, all of these are big winners. And of course, they're big winners because we do have our neighbors, in Southeast Asia who are also exporting to the UK. But we do have a trade deal, a very, very competitive trade deal with the UK. And of course, there is an expectation that India is going to gain big out of this. Now, India's Commerce Secretary Rajesh Agarwal stated yesterday that this FTA safeguards India's sectors, specific sectors like dairy, cereals, gold, jewelry, smartphones. And this is aspirational and it's balanced. Now, as far as double contribution convention is concerned, that's a key highlight because it's going to be a game-changing feature for Indian employees who are working abroad, and they will not need to pay doubly. So that's a big victory for the services sector. In fact, what we are also given to understand is that there is going to be professional benefits due to predictability and due to mobility commitments that are part of this FTA. As far as the auto sector is concerned, well, India has given concessions to the UK in the form of quotas for vehicles, and an overall quota of 37,000 vehicles annually has been given. In fact, there are no concessions on EVs till year 5. So lots of sectors in focus, and of course, how this really plays out, that will be interesting to watch.
All right, India and UK FTA kicks in from today. But let's move on and talk about what Commerce Secretary Rajesh Agarwal described the India-UK Free Trade Agreement as a defining moment in the country's trade history, calling it one of the first FTAs of its kind between the 2 major economies. Let's listen into what he had to say.
Defining moment in India's trade history. This is one of its first FTA of its kind, which establishes a future-oriented economic architecture between the two major economies of the world. This is also one of the most ambitious and aspirational FTAs of India, which we are operationalizing as till date. If you look at, we call it a gold standard and first of its kind FTA because of its wide sectoral coverage and deep reduction in both tariff and non-tariff barriers. The 30 chapters across which negotiations have taken place under this agreement extends well beyond conventional tariff liberalization.
All right, let's move on to some macro data then. India's direct tax collection continues to show healthy growth in the current financial year. The gross direct tax collection have risen 16.1% on a year-on-year basis to 7.74 lakh crores. As of July 13th, the net direct tax collections have achieved 24% of the FY27's budget target. We have Kuldeep, who's now joining us with the breakup of the numbers.
Well, the gross direct tax collection is up 16.1% year-on-year to rupees 7.73 lakh crore as per the data shared by the Ministry of Finance today. Now, if you look at the net tax collection, which is after refunds, so the net tax collection recorded a growth of 16.4% to rupees 6.51 lakh crore, and the refunds growth was 14.57% to rupees 1.22 lakh crore rupees. So this data is still July 13th as per the Ministry of Finance, and if we look at this data, it reflects momentum in economy. Now, if we break up the data corporate and income tax growth wise, so the corporate tax growth was 22% to rupees 2.40 lakh crore till July 13th year-on-year. This means that there has been business activity going on. The companies have been doing well. This is what the data shows. In fact, if we see the last year's growth figures, so the corporate tax collection for FY26 was somewhere around 10%, and the income tax growth for the FY26 was somewhere around 5%. Now, here the net income tax growth is 11.6% till July 13th to rupees 3.84 lakh crore. But remember, this is the beginning of financial year. We are hardly this is for till the 13th July. So this is just the beginning of financial year. But so far, the numbers are showing good signs, positive signs of good momentum in the economy.
All right, let's move on to the stocks that will be in focus in today's trading session. And for that, my colleague Mitali is now joining us. Hi, Mitali, take us through all the stocks that you've picked out for us.
Good morning, and talking about the stocks in focus for today's trading session, starting with Belrise Industries. That stock will be in focus after the company opens its QIP of rupees 1900 crore rupees today. The floor price has been designated at 230.79 rupees per share, which is in line with the current market price, indicating actually a limited dilution for the stock. Also, KC International, it has bagged fresh orders worth rupees 1180 crore rupees. Keep that stock on your radar. This order, it includes its first transmission line project for the Indian data center, which is positive for its T&D business. Also, Kirloskar Brothers, it announced a global order. Its UK subsidiary SPP Pumps has secured a 150 crore rupees of contract from offshore construction. Anurati Stock and Brokers company has announced their Q1 FY27 results. Although the results, they seem to be mixed. While the revenue has risen nearly 22% on a yearly basis, sequential performance remained weak, with the EBITDA declining nearly 12%. Margins have contracted 362 basis points on a QOQ basis, and the profit after tax, it is impacted by nearly 21 crore rupees with exceptional charges linked to a DP fraud compensation. Biocon will also be in focus after Mylan Incorporation. They sold nearly 4.59 crore rupees of shares in yesterday's trading session. But the positive takeaway here is that several marquee investors have picked up those stocks from the market, including names like ICICI Prudential MF, HDFC Mutual Fund, Kotak Mutual Fund, as well as Goldman Sachs. Delivery, that stock also should be on your radar as it gets a regulatory boost after RBI grants its wholly owned subsidiary a Type 2 NBFC license, enabling it to expand into financial services. IDBI Bank, that also remains on the radar after reports of its disinvestment process is in the media reports. Although the bank clarified that it cannot comment anything as of now on the media speculation. Among the PSU stocks, NBCC has approved the merger of HSCC India with itself, strengthening its healthcare infrastructure portfolio. Also, Ease My Trip, it has signed an MOU with the Jharkhand government to promote the tourism on a digital basis. On the downside, Gen Resource Recycling may see pressure after a furnace explosion happened at its Tamil Nadu plant, which led to one fatality as well as multiple injuries. And finally, the Dalmia Bharat Sugar, it has announced an investment of nearly $132 million in Tanzania to set up a 3,500 TCD sugar plant, along with a 20 megawatt cogeneration facility, marking its significant overseas investment. So those are the stocks to be kept on your radar in today's trading session.
All right, thanks so much for joining us, Mithali. Let's move on and talk about another counter that will be in focus, and that is Nuvoco Vistas, and it is on account of its Q1 numbers and the Concall highlights for Q1. The Concall highlights suggest that they have reiterated its FY27 volume growth guidance of 7 to 8%, broadly in line with the industry expectations, and the management has also indicated that cement prices have remained stable in the first 2 weeks of July. Ashesha is now joining us with the key Concall takeaways.
Well, yes, so the stock was in focus yesterday as well on the back of very strong numbers that it reported for the first quarter, and the stock jumped as much as 7% in trade yesterday, and the stock will continue to remain in focus today on the back of management commentary. First, let's talk about volume growth. Now, remember, the company reported lower than industry growth in the first quarter of FY27, but the management says that going forward for FY27, volume growth will be in the range of 7 to 8%, in line with what the entire cement industry is expected to report. Let's also talk about pricing then, which has been a concern for the street, but the management believes that they expect price hike for the rest of FY27, and prices have largely remained stable in the first 2 weeks of July so far. They've also spoken about costs, where the management has contained costs to a large extent despite West Asia crisis-led escalation in costs in the first quarter of FY27. Power costs rose by about 40 to 50 rupees per ton in the second quarter, and fuel costs meanwhile are largely expected to remain steady in the second quarter of FY27. As far as their capacity expansion plans are concerned, remember, they continue to remain intact. They are guiding for about 900 crore of capacity expansion in FY27, and they have planned capex of about 952,000 crores in FY28. So the capacity expansion plans continue to remain intact, and that is a positive, but otherwise prices are expected to improve, and that is expected to be another positive for the stock.
All right, thanks for joining us with that, Ashesha. Do watch out for Nuvoco Vistas in today's trading session as well. But let's talk about Lexi, that delivered an in-line revenue performance for the June quarter, but profitability was a disappointment. Meanwhile, L&T Tech reported a steady first quarter with revenue margins and profit all improving sequentially. Ashesha is joining us yet again with the highlights.
Well, yes, let's start with Tata Elxsi. That one has reported in-line set of revenue performance, but as far as profitability and margins are concerned, they have taken a hit this time around, so that could be a concern for the street. We have Nirmal Mang, who have written a report on this, where they're saying that first ever quarter of 10 billion plus revenue that the company has reported in first quarter of FY27. They've reiterated their FY27 guidance of high single-digit revenue growth expectations. So revenue guidance for the full year FY27 has been maintained. After disappointing FY26, they say FY27 has started on a positive note. Management believes that media and communications vertical is expected to report strong performance going forward, and they continue to remain optimistic on the life sciences vertical, which is expected to report strong growth in FY27. So largely in line as far as revenue is concerned, but margins were a bit of a disappointment. Meanwhile, let's also talk about L&T Tech, because that one also reported largely in-line set of numbers. Nuvama has come out with a report. They are maintaining their whole stance on the stock with a target price of 3,500. They say revenue growth at about 1.5% on constant currency terms was better than what the street was working with. Mobility growth was very strong this time around, so the mobility segment reported very strong growth, and they believe ER&D industry shall take more time to recover from the turmoil that the industry has been facing currently. MK meanwhile has reiterated its ad stance on the stock with a target price of 3,800. Operating performance in the first quarter was steady, and they say that they are seeing early benefits from favorable business mix and alignment with its 5-year Lakshya strategy. So for now, in-line set of numbers is what LTTS has reported. But for Tata Elxsi, bottom line was weak, and that could be a bit of a disappointment for the street.
All right, Ashrisha, thank you so much for joining us with that. And it's time to wrap up this edition of Market Cafe. I'll take a leave. Thank you so much for tuning in. Don't go anywhere. The market will take the market action forward.